Good morning. So today we're going to talk a little bit about getting paid. We've just spent the last 2 days working through our bookkeeping bootcamp and getting our accounts up to date. So we've imported our bank, cash, credit card and PayPal transactions. We've posted all of those. We posted our invoices or our receipts from customers and our payments to suppliers as payments on account if we didn't have invoices to match those against. And then on day 2, we posted all of our supplier and our customer invoices. So our sales and our purchase ledgers should now be nicely up to date. So what's next? Typically, when we come across a business who has been a bit out of date with their accounts and they have got a bit of a backlog, the biggest problem they've had with that, the biggest side effect of that is that their credit control hasn't been done, or it's out of date, or they don't quite know who owes them what. So once we've got our systems up to date and we know that our sales ledger is nice and clean, we can start looking at credit control and chasing the people that owe us money who haven't actually paid. So one of the most important jobs in our business is to get paid promptly for the work that we've done. So assuming that we have actually invoiced promptly and we've got them nice short payment dates on our invoices, so there's no need for 30, 60-day payment terms anymore. That's just crazy.
Things of the past.
Yeah.
The main problem also is when people don't put payment dates at all.
Yes.
No due dates.
Yeah, we see that a lot, especially with small companies, startups and things like that. They just don't have a payment date on. So if that's your supplier sending invoices to you for payment and they haven't got a payment date on, then that's great. Give them a 30-day payment window and pay them on 30 days. But if that's you, then that's one of the reasons why you're not getting paid as quickly as you should do. So check your outgoing invoice templates and make sure they do have payment dates on and the correct bank account details. So that's another one where we've seen, the wrong bank account details or a digit missing or none. A lot of people like to send bank details on a separate letter-headed paper so it doesn't come with the invoice, which is great. Not really. It's daft. It means that if somebody else takes over payment systems or you move bank or something like that, then you end up finding that you have to ask for those payment details again, or you want to pay somebody and you don't, you pay somebody else instead, and then it just spirals like that. So make sure your payment details are on your invoice so that you can get paid promptly. So once you're up to date, we recommend staying up to date. And by that, I mean posting all of your bank transactions on a daily basis. Now, if you've got quite a lot of transactions, that probably isn't front of mind for you and it may not be a priority. That's okay. What I would recommend is that you post cash in and receipts from customers daily to make sure that your sales ledger, your aged receivables, is always up to date. That will really help for when you start to put basic credit control tools in place. So if you're using Xero, for example, you can put some very basic credit control automation in place. Xero allows you to send out invoice reminders to your customers. Now, you've got 5 different date points for raising invoice reminders, so 5 different email reminders that you can send out, and what it will do is whether you set them for sort of weekly or 10 days or every 14 days, it's a separate template for each one, so it allows you to set up an email reminder and then forget it so that you don't have to worry about that, and Xero does the basic credit control for you. Now the Xero process is really good because it allows you to send a polite reminder, say on day 7, a reminder on day 14, then perhaps on day 21 you're like, excuse me, have you forgotten about us? On day 28 you can say, not very happy despite our repeated reminders, you've not paid. And then the next one, so you might want to set that at day 35 perhaps, or day 45, so give a break for the next reminder, and then that is when you start going in the big guns and you start looking at a more serious and more sophisticated credit control. So your first 30 days of arrears in credit control can be automated on a set and forget basis in Xero, and we strongly recommend you turn that on and let that happen. That then allows you to move on to the more sophisticated credit control, which Harry's going to talk you through.
And also, on following on from invoice reminders just before then, is you can in Xero trigger some customers on and off. So even though you're sending out reminders to everyone, you might have some customers who you have a particularly strong relationship with, and you think, actually, I'm going to be a bit softer on them. I'm going to do my credit control manually with them, however you want to do it.
Yeah, I wouldn't do that.
Yeah, I wouldn't do it, but it is an option. Some people like to do that. Some people like to know that the option is there to switch them off. I personally think switch them all on, chase them all. And at the end of the day, if you've got a customer you've got a really good relationship with, they'll understand and you'll still get on well with them anyway.
Yeah.
They just get the automated reminders.
I think you should still chase, even if you know that they're in cash flow difficulties, even if you know that they are having issues at the moment, because you still want to be front of mind and want to remind them that that is still outstanding. The only time I would turn the invoice reminder off is if there is a problem with your service or delivery and there's a dispute on the invoice. So don't chase for it. Work on fixing the problem that the customer's complained about. That's the only time I would say ever turn off invoice reminders.
But it's handy to know it's there should you need it. Otherwise, I was
going to keep that secret.
Well, there's no secret there. So the next stage would be to implement a basic credit control. We've mentioned about the automation, and we also would say, to follow on from that, it's worth having, whether you're a bookkeeper or a business owner, it's worth having a weekly credit control meeting with yourself or whoever else is involved in credit control. By that I mean we want to be reviewing age receivables. We want to see exactly what's outstanding, and we want to understand whether there's any ongoing issues. So we want to know whether there's any disputes, whether there's any customers who have any issues in delaying the payment whatsoever. We just want to know.
It does sound a bit silly, doesn't it? Having a credit control meeting with yourself. But if you diarise it and put it in your diary, you'll get it done. And if you don't, and you keep thinking, I'll leave it till tomorrow, I'll do it another day, it won't get done. So make sure you do a weekly, at least, credit control meeting with yourself, preferably on a Monday, maybe a Tuesday. Wait till the Monday rush has got out of the way and then focus on a Tuesday, which gives people time to make sure that your payment is delivered by Friday. And what you'll often happen is when you're doing the credit control, people will then say, yep, I'll try and make payment by Friday. It's their natural sort of next obvious deadline. So if you credit control on a Tuesday, people will often try and pay you by the Friday. Tuesday
is actually a very good day from what we've found as well. Seems to be the day that all the accounts teams are in. Monday seems to be the day that people are catching up. Tuesday seems to be the day the accounts teams are in.
Or if
not
off.
Thursday. But at least if you chase them at the start of the week, you're more likely to get paid on the Friday, or at least be able to get a call back or anything like that. So credit control meeting with yourself, review your age receivables. Then I would recommend using in Xero in particular, they've got an awaiting payment tab in your actual sales invoices. So what you can do is you can review in order what is due and when, and this can be particularly helpful because then you can basically you can start chasing on the ones who are just falling overdue. You don't have to go looking for the details, do you? And exactly. It tells you the last note of what you said last time, or when you've got payment dates set in there. And exactly. Gives you a bit of a workflow. It's really handy. And then the good thing about Xero is you can click into the contact record, and if you haven't, I would recommend setting up, assuming you have contact records set up in Xero, basically phone numbers, email addresses, really, really key. I personally set up everything in Xero. It's so much better to have it all in one place, especially if your credit control is all operated from Xero itself, or whatever accounting system you use. I'd just recommend using the contact details. Otherwise, it's so much harder. It just makes it easy because everything you need, if you want to do credit control on that Tuesday, everything you need is already there in that one screen. You haven't got to go and look for it. So for the 2 or 3 minutes it takes you to set it up when you set them up as a supplier or customer in the first place, it just saves you so much time later. It does. And then the other thing is issue customer statements. If you've got depending how up to date they are, I would say if you've recently updated your accounts, you have lots of payments on account, or you've got misallocations potentially where you're basically allocating things everywhere, then I would recommend issuing an activity statement instead of a statement on account. Otherwise, they get confused. Or do both.
That's a really good point, because the invoice reminders will send a copy of that invoice. So if someone's got 2 invoices outstanding, they get 2 reminders for the 2 invoices. But the statement isn't an automated function in Xero. So the statement you'd send manually, and then you can put a custom message on top of that makes it more obvious that you're actually looking at the account and you've overviewed it.
And the only thing to say with that is, it sounds really stupid, change the date when you issue it, because otherwise, if Xero's defaulted, I don't know why, but at the moment, Xero's defaulting to the date you last sent it. So if you don't change the date, you'll send them to a statement which might be from, say, last week, last month. It just looks daft.
It used to be month end, didn't it?
It used to be, but either way, if you're sending it mid-month, still need to change it.
Yeah.
So definitely check the date. Otherwise, it just raises more confusion. Then. This is the fearful part that people don't like. When in doubt, call your customers. To be fair, they're not all monsters. They're quite happy, and the call itself can be a bit daunting. But actually, we do have a script that we can put into place if you're a bit nervous, a bit uncomfortable, just to give you a feel for what you should be saying, how you should be asking it, and just takes away some of the pain. And once you're used to it, it becomes pretty much second nature.
It also makes it very difficult for the customer if you're ringing them and asking them personally to pay their bills. It's embarrassing. They don't like it. You don't like it. They know they haven't paid, and it puts them in a very awkward position. So they feel worse than you do. So don't worry about calling them, but do it. And you're more likely to get a stronger commitment to make that payment. If they can't pay it all in one go, why don't you suggest a payment agreement, say, a quarter of it over the next 4 weeks, something to make their cash flow a little easier, but make sure that cash gets in your bank and not in somebody else's.
And speaking of getting cash in the bank, with Xero in particular, there's a receivable report which you can sort basically you can group by due dates. Now, we've got a few clients who like this approach, because what you can see is what cash you're expecting to have coming into your business on what date. So you can plan for the week a bit better. Really helpful for cash flow. It won't necessarily get you the cash in if you're not chasing it, but it's a bit of an idea for what could be coming in and when, and give you an idea. Because actually, it might be that you've got money coming in a week, but it might just be worth giving a gentle nudge to your customers to let them know that their invoice will fall due by the end of the week. So sometimes you do these little advanced reminders, and it comes in quite handy. It does work. And
are you talking about reminding people that something's due before it's due?
Yeah, you can do. It depends what sort of client relationship you've got. It depends.
I've got mixed opinions about that.
It works in some. It really does. It depends what. I've seen it working in some clients quite well, actually, and that's the only reason I say that. My personal preference is I don't necessarily like to, but actually it does have merit. It does work sometimes.
See, personal
preference, really.
I would ignore it, because I would know when I want to pay somebody anyway. And I have seen originally when I set credit control up on our business, I put reminders up to go out the day before, just to say don't forget your payment is due, and some people really got upset about it.
It depends.
At the implication that they might not pay, and I hadn't thought of that before, so I don't do it in our business. And I know some clients do it really successfully. It really is personal preference.
It's nature of your business, and actually I'd say it's probably the ones that I've seen it work with actually do have a common ground, and it seems to be the ones who are working with the bigger corporate clients. Because the corporate clients will do, say, they might even do a monthly payment run, and quite frankly, if you miss the boat of when they're processing it, it becomes quite hard for them to then catch up on it. So for those ones, it does work.
But then what you've got there is you've got an accounts payable department, and the accounts payable teams are only focused on processing invoices and paying them. So they're not emotional about it. So they're not insulted by being chased. They're using that and the client statements as a reminder to go and check their accounts to make sure that they've got all of the invoices in. So it does depend very much on your client base, doesn't it?
But one thing that doesn't depend on your client base is whether or not they can give you an expected payment. So when in doubt, if you can't get them to commit to a payment now, at least find some sort of common ground where you can get an expected payment day or a arrangement to pay in place, just so that you've got a bit more of an idea. And then also, if you're sending out automated reminders, if you do have an expected payment date which is going to be just after your next reminder, at least you know it's probably worth triggering that automated reminder just off for that 1 week, just to make sure, because otherwise it looks daft if you chase them and then they paid it the next day. It just looks a bit silly.
Yeah. Totally. The other thing that's quite useful if you're asking people for payment dates and things like that is also asking if they want to pay on a credit card, and making sure that you've got a payment facility so that you can actually take that call over the phone, take that payment over the phone. So if you've got Stripe payments, you can download an app onto your phone that allows you to use your phone as a card not present terminal. And then you could ask for card payment over the phone, which again deals with that process or that payment immediately, and saves the hassle.
Yeah. Lots of little tips.
So stage 3, once you've got sort of semi-automation and you've got basic automation in Xero, you've then got your own weekly credit control meetings. Once that's all working and that's in place, you might want to look at further automation. Now, there are some really cool systems out there. We use Chaser, which is a really good credit control system, and it allows you to escalate your chasers, and it can get to a point where, for example, if it gets to 60 days, you can add another person in, so it goes to the credit control person's manager, or it goes to the company director as well. So you can escalate credit control, and you've got full control over the content of the emails that you're sending. Now, whereas Xero will send 2 reminders out for 2 invoices that are due, Chaser groups the invoices and sends 1 statement out for everything that's outstanding at that point in time. So Chaser is a really, really good tool to use, and we thoroughly recommend it. Fluidly is another tool that we use for some clients. It is newer in the marketplace, and along with the credit control function that it also has a cash flow forecasting function. Now, this is quite a new tool, so it's being developed, and it's got a couple of little clunky bits that it's still working out, but actually it's really handy if you've got quite simple and straightforward cash flows, and it works really, really well. It is more expensive, slightly more expensive than Fluidly, than Chaser, and it depends very much on the volume of transactions and the number of chasers to where the price point starts, but both of those are really worth looking at. Now, Satago is another example of a credit control system. This has much simpler credit control chasers than Chaser and Fluidly, but Satago is an invoice financing business. So what they're looking for, they provide this free service, it integrates with Xero, and what they're looking for is to find those invoices where your client hasn't paid you, but they can spot finance that, which means that they can advance you the funds in advance of your client paying you, and then your client pays you and you pay them back. So it's really, really short-term lending. So their system's free, but they're making their money on the additional lending through the spot factoring. So that is a quick run through of day 3 bookkeeping bootcamp, how to get paid. So we'll see you tomorrow. Bye.
Bye.